India embarked on a bold mission in 2017. It launched the Goods and Services Tax, or GST. The goal was clear: one nation, one tax. This promised simplicity. It aimed to streamline a complex web of taxes. It was a beacon of hope for businesses and consumers alike. Before GST, India had a tangled system. Multiple taxes created confusion. It was a logistical nightmare. Businesses struggled to navigate the labyrinth. The GST was supposed to change all that. It was a chance for a fresh start. The initial rollout brought optimism. Businesses saw a glimmer of hope. Consumers anticipated easier transactions. The dream of a unified market seemed within reach. It was a moment of great promise. The GST's implementation was a massive undertaking. It involved replacing numerous state and federal taxes. It required coordination across the country. The sheer scale of the endeavor was unprecedented. Fast forward to today, and the GST landscape tells a different story. The initial promise of simplicity has faded. The system has become riddled with complexities. It's a far cry from the streamlined system envisioned. Take the humble popcorn, for example. The GST Council, in its infinite wisdom, has decreed 3 different tax rates for this cinematic snack. Non-branded popcorn enjoys a 5% rate. Packaged and branded varieties face a 12% levy. But dare to add caramel and you're looking at an 18% tax. This popcorn predicament highlights a fundamental flaw. The GST system has become bogged down in minutiae. Instead of a single unified rate, we have a maze of categories and subcategories. It's enough to make your head spin faster than a popcorn machine. And it doesn't stop there. The confusion extends to everyday essentials. Coconut oil, a staple in many Indian households, faces its own tax turmoil. Then there's the great paratha roti debate, where the taxman seems to differentiate between flatbreads based on their freezing point. It's enough to make you lose your appetite. The complexities of India's GST system haven't gone unnoticed. The World Bank, a keen observer of global economic trends, has raised concerns. They point to the multiple tax slabs, complex enforcement mechanisms, and onerous reporting requirements. These factors, they argue, create a compliance burden for businesses, particularly small and medium-sized enterprises. Experts within India echo these concerns. They argue that the current system is a far cry from the original vision of one nation, one tax. The complexities, they say, create opportunities for confusion, misinterpretation, and even litigation. The root of the problem, some argue, lies in the conflicting interests between the federal and state governments. The GST, while intended to be a unified system, involves revenue sharing between these entities. This can lead to disagreements and compromises that ultimately undermine the system's simplicity. Despite its complexities, the GST has been a revenue earner for India. Collections have consistently exceeded expectations, reaching record highs in recent years. This revenue is crucial for funding government programs and infrastructure projects. The challenge for India is to maintain this revenue momentum while simplifying the GST system. This requires a delicate balancing act. It involves streamlining tax slabs, clarifying definitions, and easing compliance burdens for businesses. Crucially, any reform effort must involve input from small businesses. They are the backbone of the Indian economy and often bear the brunt of GST complexities. Their insights are invaluable in creating a system that is both efficient and equitable.